Peace, guys. Patrick, Conservative Rap, and let's get into some economics. Fed is, of course, keeping the rates high for the time being. They're using this to put pressure on Trump, blame tariffs. But the Fed rates, they're not really hitting the consumers. They're hitting the manufacturers mostly. So let's take a quick look at what's going on. You tell me your thoughts on the economic front in today's world. First, let's take a look at Todayville. Offshore wind's mask finally comes off. This is clipping from the Daily Caller. The green fairy tale now seems to be unraveling faster than a faulty wind turbine blade in a Nantucket storm. On Monday, August 11th, Danish offshore wind giant Ørsted dropped a bombshell, notifying the market it plans massive rights issue worth up to 60 billion Danish kroner, about 9.4 billion, to prop up its flailing offshore U.S. operations. The plan, which amounts to 50% of Ørsted's market cap, is a desperation move driven by the forces of reality and President Donald Trump's no-nonsense energy policies. Ørsted took a nosedive in the stock market in the wake of Monday's announcement, cratering as much as 31.2% in Copenhagen trading, erasing billions in value overnight. Panic comes as the company is scrambling to fund its Sunrise Wind project, a 924-megawatt eyesore off New York's coast, and shore up another 8.1 gigawatts of planned capacity through 2027. Ørsted says the cash infusion is a direct response to what it delicately calls material adverse developments in the U.S. market. Translated to plain English, this means Ørsted, whose normal business model would have been involved selling a large minority share to investors needed to raise capital, has been unable to find any buyers as Trump's energy policy revolution takes hold. And again, the Green New scam is coming to a front. A lot of these businesses can't exist unless they're propped up by subsidies via the government. And unfortunately, that's no longer the case. Next, let's go on to Zero Hedge. This is a rare earths rally after Department of Defense sets a price floor. The global rare earths metal market has seen a whirlwind of developments in the past few weeks, sending ripples through both supply chains and pricing. A series of U.S. and Chinese policy moves, the Washington's unprecedented price support for rare earth magnets to Beijing's export curbs, continue to reshape this critical sector. U.S. sets new rare earth price floor to challenge China's dominance. The United States recently escalated its efforts to reduce dependence on China by directly intervening in pricing. In mid-July, the Department of Defense struck a multi-billion-dollar deal with MP Materials, America's sole rare earth miner, guaranteeing a minimum of 110 per kilogram for neodymium praseodymium oxide. That price floor, which is nearly double the current China-based market rate, around 60 kilograms, aims to incentivize domestic production of the super-strong magnets used in EV motors, wind turbines, and defense systems. Officials and analysts describe the move as a game-changer for the industry. By establishing higher Western pricing benchmark, the U.S. hopes to offset China's long-standing tactic of undercutting prices to maintain dominance. This benchmark is now a new center of gravity in the industry that will pull prices up, notes Adams Intelligence. Adding that it will bolster non-Chinese producers globally. And moving on, here's more on the economic front. National Pulse. Manufacturing surges under Trump's Made in America drive. What happened? Major multiple companies announced billions of dollars in investment to expand U.S.-based manufacturing and create thousands of jobs. Who was involved? AbbVie, Apple, Century Aluminum, Ford, GE Appliances, and the Donald Trump administration. Announcements made over the last few weeks boosting U.S. manufacturing plants across multiple states. Historic trade victories and pro-American policies are bringing jobs, factories, prosperity back to our country like never before. Significant job creation, increased manufacturing capacity, and billions in investment aimed at revitalizing American industry. The American manufacturing economy is seeing a surge of investment driven by President Trump's tariff and deregulation policies. Over the last several weeks, numerous major companies, including AbbVie, Apple, Century Aluminum, Ford, GE Appliances, have all announced that they will either shift production from overseas back here to the United States or will expand existing domestic manufacturing facilities. Under Donald J. Trump's bold leadership and unwavering commitment to putting America first, our nation is witnessing an unprecedented surge in manufacturing investments and job creation. They said in a statement, historic trade victories and pro-American policies are bringing factories, jobs, and prosperity back to our country like never before, delivering big wins for hardworking Americans. AbbVie announced $195 million investment to expand American-based drug production capacity. Apple revealed plans to increase its U.S. investment to $600 billion over the next 4 years, bringing components of its supply chain and advanced manufacturing back here. And this move will create 20K jobs in America and many thousands more across its suppliers. Century Aluminum announced it will invest $50 million to revive its South Carolina plant for the first time in a decade, returning to 2015 peak levels. Ford disclosed a $5 billion investment across its Kentucky and Michigan plants to develop a new mid-sized truck and advanced batteries. Meanwhile, GE Appliances announced $3 billion investments in its U.S.-based manufacturing, onshoring 1,000 jobs and expanding its plants across 5 states. All right, and just to move this on to X for some final analysis, let's take a look at what some of the administration is saying directly on this front. Here's Peter Noble.
Goldman found, according to its research, that consumers in the U.S. have absorbed about 22% of tariff costs, businesses 64%. You're saying that's just not
the only entity which has less respect in terms of their data than the BLS these days is Goldman Sachs. I mean, think about it, Joe. It's like the advantage I have is I was here during the first term of Donald Trump, and everybody was saying that we were going to have this wild, out-of-control inflation. The Wall Street Journal personally, twice in lead editorial, said there was going to be a Navarro recession because of tariffs. This never happened, and Goldman Sachs was one of the big voices that was always doing the panic and inflation kind of thing. I just don't trust their numbers. And the reason why the American public shouldn't trust their numbers is because their numbers are usually wrong. And I had to fight, interestingly enough, in the first term. The first guy who was the National Economic Council director was Gary Cohn. He was a Goldman Sachs guy, right? He's the guy that Hassett does the job now beautifully. But I had to fight Cohn every day when he was there because he kept saying, Mr. President, these tariffs are bad. They're going to cost consumers. They're going to slow everything down. They never did, and Cohn left with his tail between the legs because he was always wrong. But the point, Joe, is trust your eyes.
Trust your eyes and don't trust these fake news narratives that pollute the airwaves with disgusting fictions about where our economy is headed. Let's take a listen to Scott Bassett.
Obviously, the tariff itself is paid at the port, but what if the producer in the other country has lowered their price the 10, 15, 20% so that there is no price change with the tariff? And obviously, our largest trade deficit is with China, and China does not have the same profit objective that other Western democracies do. So that is an employment agency, and my view has been that they would continue to eat the tariffs. They are doing that. So I think what we've seen is likely to continue happening. I also think there are probably a lot of corporate margins that got very fat during COVID, and now we're seeing a return to a normal pre-COVID margin.
Yeah, again, on the tariffs. And here's top Fed official signals uncertainty over over rate cuts. Hawkish tone from Austin Goolsbee contrasts with market expectations for reduction next month. Remember, the Fed has the power to override Powell or remove him. Trump, ultimately, he may restructure in time the Fed into the Treasury. And there's a central bank system that operates in a world of debt. We're moving into a people system based on tariffs that's going to operate with no debt. What do you think? What do you see happening in the economic front? Feel free to like, comment, subscribe, share, and check me out at ConservativeRap.com for more. Thanks and take care.